After last week, the market looked like it was taking a turn towards the downside, but came roaring back this week. Was there a certain kitty that had something to do with that? Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our Elite webinar, where you're going to get the most up-to-date, non-biased information on the market on YouTube. Now, if you are watching us on YouTube and you haven't hit that like and subscribe button, then clearly you have no desire to learn what is going on in the market this week, because we are going to talk about all of it. So get down there, hit that like and subscribe button, and be part of the community here. And also make sure you hit that bell icon while you're down there to get notified every time we upload a new webinar to the channel. Now, of course, I have the man himself, whose namesake is on the channel, and Riz Elite. Riz, how you doing today, brother?
Doing good, Chris. Yourself?
I am doing fantastic. Now, it was quite the week in the S&P 500. Last week, stopping on Friday, we had like this big sell-off right to the 5,200 area, and that seemed to be the floor with a huge amount of buying pressure going into the weekend. Of course, there was a lot of question as to how the market was going to react on Monday. Obviously, we had a lot of catalysts going on, and basically Monday and Tuesday looked like we were going to hold below this support and resistance trend line that we've got on here. That is obviously being watched by the market makers. I joke. But as you can see, on Wednesday, we had a very massive rally, big gap up and a big push. A lot of that, honestly, due to NVIDIA and some other things going on in the market that Riz and I will talk about. And then on Thursday and Friday, we didn't really have too much movement, honestly, really just a lot of back and forth. And Friday, I'm just going to zoom in here, quite the doji candle, a lot of indecision in the market going into the weekend. Riz, what do you make of this? I mean, obviously we had, quite a big push. We've recovered everything that we lost last week, and the market seems like it just wants to go.
Yep, continuation. We can see that clear continuation in your trend line, just really hugging that trend line, using it as support the past 2 days, even Friday, right? Almost pretty spectacular in that sense. But obviously, we don't want to infer too much just off of a single trend line or one indicator or technicals, right? The fact remains that we're in a let's clearly bullish uptrend, have been all year, all year. I mean, obviously, even preceding. The start of the year, but yeah, it continued. We had a little bit of almost overbought levels in May, and then that kind of pullback we saw, eventually sort of rectified itself, and now we're not overbought, sorry, yet, close, but not yet. But let's see. It's right now we are in that situation where the market's trending up, but we have a big event coming up this week. Obviously, we're going to touch on that. But yeah, I mean, a clear bullish sign. I would not be going out and just betting against it or shorting this market. I'm not. I do continue to remain bearish, but with the caveat that, look, we're in the halfway of the year almost. We have really the big cycle stuff still to come. Potential rate cuts, pivot. How that impacts the macroeconomic data, and of course the big one, not directly market related, but obviously will have some impact with the election, the official federal U.S. election in November.
Yeah, that is definitely going to add a lot of volatility to the market for the back half of the year, and definitely something we're going to be keeping an eye on, which is, as I said earlier, why you need to make sure that you are liked and subscribed here at the Riz Elite, excuse me, YouTube channel. So yeah, obviously a lot of movement going, a lot of things. Let's take a look at that breakdown for the S&P 500 to see what's going on. And communications and tech have, kind of been on the rise here. Of course, a lot of this fueled by the AI hype, by NVIDIA, kind of the bigger one there that I'm going to attribute for most of that move here. But yeah, going into Monday, obviously the big split is going to be happening for NVIDIA. A lot of buying pressure on that, definitely helping push that those sectors up. But man, look at that drop in utilities. Probably the biggest drop over the week here from last Friday, going from about plus 13 to, let's see, about plus 9, or there we go, 8.86. So a big drop in utilities, while financials and consumer staples held pretty much steady here. Energy doing pretty well, nicely above the zero line, and healthcare making a big push here going into Friday. With consumer staples and real estate really lagging behind. But I'm interested in this drop in utilities. Riz, what is causing this? Because that's pretty substantial over just a week.
Yeah, my theory is that, this is kind of like a de-risking from institutions. It's been a good run. It's been a good recovery, right? So I think it might have been some rotation out by institutions also because, I mean, we'll touch on that later, but there is the Fed meeting
Hmm.
this Wednesday on rate decisions, so FOMC meeting. Canada last Wednesday cut rates by 25 basis points, so 5% to 4.75%. And that was a big one, right? There's a little bit of a, I would say, variance now in terms of what the rate benchmark rates are, who's cut, who hasn't. And in fact, a stat here, Canada was actually the first to raise rates, between North America. It was the first to raise rates back in 2022, right? So it's also the first to cut. I believe there was like a month difference between when Canada raised rates and then the US did. So kind of the opposite's happening now. The odds of a rate cut this month, this week, coming week, are higher after Canada cut rates. But again, it's 25 basis points, right? 0.25%, not the biggest deal. It's not like, oh my God, credit is so cheap now. Not yet. We're still I think we're gonna see some rate cuts, but we're still gonna remain higher than the past, average 5, 6 year benchmark rates. I think we're still gonna be above the average, which is good because those rates, next to 0% real rates, interest rates is not sustainable. And that's why we continue to see a lot of these assets remain frothy, remain just crazy. I mean, like, just GameStop and crypto and all these things, these speculative things that are just continue to just be bonkers is very reminiscent of 2021, which is when rates were it was like you were getting paid to borrow after factoring in inflation.
Yeah, definitely a lot riding on this week in these decisions, which we'll touch on here in a minute. But let's take a look at the breakdown for some asset classes that we're keeping an eye on. And oil continuing to slip here, going down below our trend line. That is acting as resistance now. As we see, we came close to it a couple times, but really pretty big sell-off in oil, all things considered here after this long uptrend. So definitely breaking trend here, a confirmed breach and trend reversal, if you ask me. Down below this 76 area that has acted as support and resistance for a while for oil. So definitely a pretty substantial move there this week. And gold continuing to bounce around and be absolutely bonkers. Looks like we had a pretty big selling day going into Friday as far as gold is concerned, or at least the valuation of gold, I should say, closing at $2,293.59 an ounce on that. But we've been talking about gold for a while. It's going nuts. That hasn't really changed. But yeah, Riz, big move down here in oil this week. What do you make of this?
Yeah, we also had some news from OPEC. So the OPEC has agreed to um, continue to keep production keep the production cuts going, extend that, I believe, into next year. So that's a big one, right?
Oh yeah.
They see the kind of the writing on the wall in terms of being less demands even seasonally, right? The fact that there's less demand seasonally compared to prior summer months, right? So they've kind of seen that writing on the wall. They've all kind of agreed to production cuts and some there are some constraints as well, but they're voluntary. So some countries, some oil producing countries may or may not abide by some of the voluntary production cuts, but I would say the mandatory or controlled cuts continue to be in place. With that said, oil prices are also trading, I believe, in my view, at levels where the the broader market forces think that maybe a recession is on the horizon. That's the kind of levels they're trading at. If you look back to 2023, when odds of a recession were higher, when rates were obviously higher, oil was trading at around these levels, 70, 75 about, right? If you go back to last May, you can see that at the left-hand side of the screen. So it's interesting that oil, even after these production cuts, even after some of the continued geopolitical up unrest we've had, specifically in the Middle East, that 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 continues to go on, and oil is still at these levels. So keep that in mind. There is some recessionary musings, and I think that's why oil is also continued to be discounted here, in my view. I'm not saying I'm expecting $90 or I think that's a fair market value. I just think around 75, 80 is 85, 75 to 85 is a good, I think a good level, especially for in season, summer. Uh, but yeah, the fact that they did a continuation on production cuts kind of tells you that yeah, they're aware of some of the headwinds.
Definitely something to keep an eye on. Obviously, if we start going into that R word, people are going to be probably traveling less. So that does make a lot of sense. And production cuts at that point would definitely be warranted if there's less demand. So definitely something to keep an eye on here for oil as we go into the hotter months. But let's take a look at the bond yields and the US dollar. Just starting with the dollar, doing things a little out of order here. Really not much to talk about. Really mostly just consolidation for honestly most of the month. I mean, honestly, there's been a little up and down movement, but nothing sustained. Nothing like what we saw back here, in July of 23 and this nice solid uptrend going into October on the dollar. We're really just kind of holding steady, and I feel like it's just kind of like we're in a wait and see, time period right now because everybody's waiting to see whether we're going to cut rates or not. Now, obviously, bond yields took a pretty big hit this week. If I had to guess, that's probably in response to the Canadian rate cuts. But Riz, am I right on that assumption, or is there something
Yeah.
else going on here?
No, you're right. But then look at the pickup. Look at the
Yeah,
pickup
big
on
pickup on
like that
Friday.
Thursday, Friday. Like that. See, that I think says more than than the actual drop in the start of the week, right? Like wow, like that's not small. That's not, that kind of volatility isn't minimal. Obviously we are going to see more continued volatility in bond yield as market digest whatever happens on FOMC on Wednesday. But yeah, as well as the dollar, like that dollar spike, kind of normalizing and the dollar spike there, that's not small either. So it's very interesting to kind of see these things play out. Week by week as we head into different catalysts, as different things happen. So, even the Canadian dollar, even after the rate cuts, remember when you have a rate cut, it usually has a bearish or downward pressure on the currency. So the Canadian dollar, um, rightfully so, should get weaker uh, compared to the US dollar, which it did, but not as much as you would think. So that also leads you to believe that, okay, maybe currency traders and institutions are also factoring in rate cut that's going to happen in the US this week. Now, if it doesn't, oh boy, I think that could invoke much more volatility than we've kind of seen the past couple months because we know volatility is very low. We can see that via the VIX. And let's see. I think Wednesday, there's a lot riding on Wednesday, especially with Canada's cut last week. And oh boy, it's going to be interesting. Let's see if we can get some more volatility, and I would welcome it.
Yeah, for sure. It's definitely going to be a big week in the market. So, if you are here on the live call, please go ahead and start posting your questions while Riz and I start talking about the important dates in the market this week. And you might as well just take a nap for Monday and Tuesday because nothing's happening until Wednesday. But man, it all happens on Wednesday for the most part. We've
Yeah.
got the inflation rate month on month, year on year, core inflation, the Fed interest rate decision, FOMC is going to be talking. We got the press conference. Oh boy, it's all happening on Wednesday. Sure, PPI is on Thursday, and Michigan consumer sentiment preliminary numbers. No one cares about that. It's all on Wednesday. This is the day. This is when the market is going to be, most volatile, in my opinion. We'll have to see whether that turns out or not. But right now, it looks like they are forecasting no rate cuts in the face of the Canadians cutting rates. So that could be interesting. like you were talking about, Riz, obviously it's like, well, the Canadians are doing it. Why can't we do it too?
Yes, yes, I know, right? Those damn Canadians.
Canucks, I tell you.
So yeah, you're right. The forecast still remains a hold, but the bets or the odds on the dot plot for a cut have gone up. So that's right. That's very important to differentiate. The odds have gone up of a rate cut, but they're still squarely in favor of hold, right? So again, we're gonna see maybe the Fed, deflects and said, okay, we are leading towards it, but we're gonna give it another meeting where we hold, maybe the last meeting where we hold. And then maybe the market will just be like, all right, fuck it, they're gonna cut next one, so all right, rip this off and let's go higher. It's very much going to be what Powell says as well, um, in the press conference, and we know obviously the inflation rates, um, year over year, are slightly higher, not slightly, but a bit higher in the U.S., right? You guys have more inflation in the U.S. compared to Canada, and in a way that's actually a good thing because the U.S. economy is chugging along. I wouldn't say amazingly, but it's still continuing. It still has legs. It's still going, whereas the Canadian economy is much more stalled out. So that could be the reason, right? It's not necessarily like, oh, Canada cuts and now US has to cut. No, we're actually dealing with two different um, data sets for each country, obviously, right? The economies are also very widely different. Canada is really no economy besides fucking real estate prices. There's nothing else here. But anyways, I digress.
Hang on
Really.
a second, Riz. You guys have the maple syrup market cornered, all right.
Yeah, yeah, we have that. We have that cartel locked down, but yeah, that's the big business, But I don't. I mean,
The
yeah,
syrup barons.
yeah. Apart from, I mean, we should have maple syrup futures. We should
I
trade.
like it. I like
I
it.
I should, that'll be the next step from oil futures. But yeah, it's very different economy, different everything. So perhaps, we could see that rate hold. I personally think they're gonna hold. Um, Obviously, like I said, odds of a cut have gone up, but by no means are they, okay, it's a given that it's going to be a cut. I think they're going to hold. I think also what's going to matter after they hold is what Powell says. And we know Powell can sometimes juice this fucking market. I don't know what the
Oh
fuck,
yeah.
or maybe he's not trying to, but just people just the market just assumes that whatever he says is just, bullish, because maybe they don't take him at his word, or like he's not, dovish enough, or sorry, he's not hawkish enough. Like he's just kind of a lot more passive or laissez-faire, so to speak. And the market takes that as bullish. And yeah, we'll see how it goes on Wednesday. But there's a lot to play for.
Oh yeah, yeah. It's going to be a big day, especially when Powell takes a stand, to talk or the podium. I shouldn't say the stand, the podium. And just for that syrup futures, I highly recommend the ticker SYRP. I think that we need to petition for that, Riz. So, all right, cool. Let's talk about earnings real quick because there aren't too many to discuss because for the most part, earnings are over. However, there are two big names on here that I would keep my eyes on, those being Oracle here on Tuesday after the close and then Adobe on Thursday after the close. The rest of them, pretty much nothing unless I'm missing something. Riz, are you going to be watching
Yeah, those two.
Lovesack and Vera Bradley? I mean, I know those are your
No,
favorites.
no, no, definitely watching Corn Fairy.
Oh, of course. Yes, the Corn Fairy. I missed that one.
Oh,
My
sorry.
bad.
This is our thing, eh? This is like the earnings
Oh
calendar.
yeah.
That's our thing. Just fucking around with this. But yeah, no. Broadcom, right? AVGO, man, that's a big one. So
Okay, there you
Oracle,
go.
I'll excuse you for that. But Oracle, Broadcom, Adobe. Those are the big ones. RH2 in a way, from a home improvement type of standpoint. But those are the three big ones. So it's going to be interesting. But other than that, like you can see, pretty muted, empty-ish earnings release week.
Yep, yep. Not too much going on to keep on our eyes on there. So just three names for you to watch this week. All right, now we got questions coming in. I had questions sent to me privately, so we'll definitely take a look at those. But first, for our people here live on the webinar, Nikhil wants us to take a look at three tickers, starting off with everybody's favorite AMD. Now, I would say that, sometimes we have sympathy moves in sectors. You see when Nvidia had their big earnings report, you'd see that kind of lifted the sector. We're not seeing that right now, and AMD is basically just trading sideways at this point. Really, nothing going on. Even though everybody was all hyped about the chip releases and things like that, I mean, man, AMD just kind of trading sideways here, just really kind of hugging onto that 50 moving average and not pulling away from it. Riz, what are your thoughts on AMD here?
Yeah, solid consolidation. Usually when we see these levels of consolidation, we do see higher or not higher, but like larger moves preceding it. So yeah, I mean, personally, I'm not a buyer at these levels. I'd like to see around 140, 145 level again, to consider something. But for someone who's in, yeah, not bad kind of seeing how it plays out, have a defined area where you're going to take profits and kind of get out if it goes against you. You definitely don't want to ride this AI hype train, this storm, if it completely falls off. You don't want to be holding something like any semiconductor if the whole AI hype is does a U-turn, period. Okay, I don't care if it's Nvidia, AMD, Broadcom, anything. Okay, Intel doesn't matter. You don't want to be holding semis after this massive, huge, like unprecedented hype rally. So, yeah, AMD is consolidating right now, but it's had a tremendous run, right? Even when you look at from November to now, it's probably up about 50, 60%. Not as big, obviously, as Nvidia, but still sizable, right? In the last what, 8 months? Or like, yeah, 80% in the last what is that? Uh 8 months?
Yeah,
Yeah.
just about.
So definitely you want to be careful. Okay, remember that. I'm going to repeat that. Do not bag hold or hold semiconductors if you're a swing trader, position trader. Um, if you see this AI hype momentum turn around, okay? Because then it just doesn't matter if it's Nvidia, AMD, Intel, whatever. They're all going to start pulling back.
Definitely something to keep an eye on. All right, let's take a look at ACN. We've talked about this one in the past. I believe actually was here when it was closer towards this 300 area. Definitely took a major dump here. What was this? Okay, just people talking about it. Definitely bounced off this 280 area here and then started pulling back. Man, this one's not looking so hot, Riz. I mean, we're definitely in a very solid downtrend on Accenture here, and I'm not sure if I would be buying down here.
Yeah, this is more of a kind of a dip buy type of thing. We have earnings coming up as well at the end of the month or middle of the month, I should say. Yeah, towards the latter part of the month. And yeah, definitely I would say it's overdone. Like this drop has been overdone. I think it's a good company, a solid company, but of course it depends on your view based on the macroeconomic view. This is a consulting tech IT type of firm. So if we obviously see decrease in corporate spending, capital expenditures, it's gonna impact Accenture's bottom line. So from a technical standpoint, this is more of a dip buy type of scenario. Obviously with earnings coming up, really anything goes. But not the best setup for an entry long. I would kind of see like the fact that it had those three bullish days, followed by this red day, kind of gives you a little bit of indecision. If we see another solid red day, maybe come back to 280, and if 280 can hold, then I think that will give you a good signal to kind of potentially enter. Of course, not factoring in with the whole earnings catalyst, and anything can happen with that.
Yeah, I mean, look at earnings last time. Earnings looked pretty good, as far as EPS is concerned. Looks like they missed a tiny bit on revenue here, but I'm guessing guidance was lower. If it for a move like this, for that small of a miss on revenue, I can't see that. That's got to be guidance, if you ask
Guidance,
me.
yeah. Yeah,
Yeah, and they got
guidance and adjustments. Yeah.
absolutely wrecked.
Yeah. Yeah.
So,
Yeah.
all right, last one from Nikhil, GILD. All right, Gilead Sciences. Yeah, we this is a little biotech company. I believe that I've worked with this in the past. Yeah, it looks like it bounced pretty good here off this 62 area, but man, we kind of reminiscent, honestly, of a dip like that. There's got to be some news going on with that to make it drop that hard, and it has not stopped. Honestly, we have just busted through that 200 moving average, and we are following that 50 down, and we are not showing any signs of breaching. I will say we are consolidating pretty nicely here over the last like week and a half. That's a nice little bounce off 62, but man, this feels kind of like a knife catch, kind of similar to ACN.
Yeah, no, I wouldn't qualify it as a night catch. I mean, the fact that it's holding, this is
All
good.
right, fair enough.
The fact that it's holding 64, that's good. Is it bullish? Absolutely not. This is one of those points where I kind of gravitate more towards having a base, buying off a support foundation. We also have a dividend coming up. So be mindful of that. About 77 cents. Yeah, 77 cents per share. Not too bad. But yeah, the fact that we had a bullish kind of day on it, not looks pretty good. Definitely a better setup than what it was, let's say 2 weeks ago, right? Where it was, that was fully bearish. So kind of considering this, again, gonna keep an eye on it. Just same as ACN. These are all stocks in my wheelhouse. So I definitely keep an eye on them. But yeah, it's a decent setup for a long. If you like the company.
Fair enough. All right, Jeff coming in hot, asking about you, Unity Software. Says he's in long around 23, looking for a floor soon, hopefully. Yeah, I would hope so too. Man, that is a sell-off. We are way oversold at this point, but man, it is a bloodbath here. My goodness, we talk about seeing red, that is what seeing red looks like right there. Riz, what's your thoughts on Unity here? Obviously, they're not doing so hot.
Yeah, definitely oversold as well. Not an entry in my opinion yet. I'm not in, so not an entry. I would like to really see this thing kind of find a floor. I'm not the biggest fan. I mean this is a gaming, it's not a gaming company per se, but they provide the engines kind of similar to Unreal Engine, but they have their own engine kind of software for game developers. Um I'm not the biggest fan of the direction of the company and kind of their offering. It's decent, but not the best. And as a result, they've had decent earnings, but their management has been shaky. They've had some missteps in the marketing and all that kind of stuff. Um, so it's a company that is interesting or in my sphere of interest, obviously from gaming standpoint, all that, but from a technical standpoint, fundamental standpoint, not too big a fan of either, right? So now with that said, if we see this thing start kind of flattening out, around the 17 area, a little bit more confirmation around the 17 area, maybe a whole 1750, 1720 area, and then we kind of see it start picking up, coming back to life, that will give me an indication that okay, maybe we are in for a good entry here as a more of a speculative swing trade with a defined stop. This is not a company I'd be comfortable just holding through without any stop in place. When I say stop, I mean like a mental stop. I don't set hard stops for many reasons, but that's my view.
Sounds good to me. I would want to see a floor on this one before I jumped in it. That's for sure. All right. David asked us if we could take a look at Eli Lilly. Been on a tear, and absolutely it has. Looks like post dividend here, and honestly, post earnings, we've been going pretty good. A nice big jump up there on earnings. Let's see. Looks like an EPS beat and
Yeah.
missed on revenue. Gosh, that paltry 167 million must be stuck in the corporate center couch cushion somewhere. But yeah, a little bit of a dip post earnings, and then it's been on an absolute tear. Running wild here is Eli Lilly. Man, I don't know if I want to buy it this far extended here, but Riz, what are your thoughts on Eli Lilly?
Yeah, it's all the Ozempic competitor, their
Okay.
version of Ozempic. So if you bring up NVO, Novo Nordisk, uh, yeah, so same thing, right? Obviously, this is much more of a sustained rally. But once Eli Lilly came up with their own version of Ozempic, and their competitor to it, yeah, it's really continued very strongly. I would not buy either of them at these levels. Again, the product, the Ozempic and whatever other competitor Eli Lilly has and all the other, they're extraordinary, a massive market, massive growth there. But a lot of it has been factored in. A lot of it is very frothy in that sense from a valuation standpoint, even after factoring in tremendous revenue and earnings growth based on just those drugs alone. So, in my opinion, not a buyer at these levels. This is a pure momentum trade, pure continuation. Um, I would not buy at these levels again. Goes without saying, I'm not shorting it, of course, but I would not buy at these levels. It's a great company, fantastic company. It's not going anywhere. One of the top best pharmaceutical companies that obviously also is further entrenched in being around for a long time now that they've also got this new product offering in the weight loss sphere.
Yeah, that is definitely making a lot of waves, and we're seeing that reflected in the stock price. All right, and more questions coming in. Thank you, everybody, for posting. This is what happens when you try and talk and type at the same time. All right, so Yas is asking about Starbucks and shop. We'll take a look at Starbucks first. Says he's, looking good for long. I would say we kind of missed the venti latte here because we are running into that 50 moving average and kind of hugging it pretty well here. But definitely a very nice uptrend here on Starbucks post earnings where they got absolutely slaughtered and rightfully so. Look at that miss. That's a 14% EPS miss and about a 6% miss on revenue. So, yeah, they got absolutely wrecked, dumping the coffee on the curb, getting ground up like coffee beans. I'm not sure how many more coffee puns I can come up with, but definitely a little bit of a caffeinated rally here. Riz, how are you feeling on Starbucks?
Yeah, no, this is yeah, absolutely bang on with the coffee puns worked in. Definitely bullish on that side. But with this, yes, even this has looked very bullish continuing into that 50-day moving average. Personally, I feel like I missed a move. I was watching this and I was hesitant. I'm like, Starbucks has a lot of like, a little bit of like this sort of sentiment risk, a lot of negative headline risk with the boycotts and all the kind of stuff that it's kind of embroiled itself in. Um, and I kind of missed that, right? I kind of missed that. So, hey, it happens. But for me to enter here right now, I'd like to maybe see it kind of pull back a little bit to see an entry and then see if it can sustain that uptrend.
Fair enough. Fair enough. All right, let's take a look at Shopify. Also on Starbucks, it's not October yet, so we don't have pumpkin spice lattes. Obviously, we don't have the PSL rally just yet. All right, so Shopify used to be flying high. Now it's down in the dumpster where it really belongs. Post earnings looks like we got absolutely slaughtered, but we did find a floor and are definitely starting to grind back upwards here, even though the 50 is kind of crashing down, already crossing over the 200 moving average from this big run up here going into the beginning of the year. Riz, I know this is not your favorite company, all things being said, but what are your thoughts on Shopify here?
Definitely bullish, right? Good, kind of like literally a cup making it that U.
Oh, yeah.
Um, Definitely strong. For those that were able to kind of eye this get in. I've been watching it, but I didn't want to get in because I was like, wow, I'm not the biggest fan of the company. It was hailed. I remember back in 2021, it was like even parts of 2022, it was hailed as like the big competitor to Amazon, and it was just
Uh-huh.
painful to see and read all this. It is uh it is a Canadian company, so there is that. But with that said, not the biggest fan of this from a fundamental standpoint. But from technicals, definitely looking solid for those that want to take this as more of a technical momentum trade. Uh, right off the top of my head, I can tell you maybe have like a stop around the 56, 58 area, and then see if you can target 67 and a half 67 and a half area with that 50 and 200-day moving average kind of just coming right there in that area. So a little bit of a trade setup there for those that are considering. For me, I'm a lot more cautious. I'm a lot more, I would say, conservative on my entries and I feel if I want like take an entry in this, I would want a little bit of a pullback after this nearly 2 week straight green rally. So I'd want a little bit of a pullback before I consider an entry.
Fair enough. All right, Ryan wants to take a look at PayPal. Obviously, this is the webinar for questions this week. So PayPal been kind of the black sheep here, obviously getting crushed for quite some time. We were flying high, as you can see, kind of getting up here all just above that 300 level and then getting absolutely demolished. Let me get zoomed back in here so we can kind of get a better view of what's going on. There we go. So yeah, that downtrend is really continuing. We're definitely having a bit of a pause in it though, and kind of maybe starting to crawl back up here. Ever since about the end of October, it looks like we kind of found the bottom, which is right around here at $50 per share, at least for the time being, and really starting to kind of inch that way back up north. Now, I don't think we're going to see 300 anytime soon, if ever again, on PayPal, but Riz, what are your thoughts here? I mean, obviously we've kind of bounced off the 200. Looks like we're making a move towards the upside, but I feel like we've got a lot of resistance overhead.
Yeah, you're right. A lot of resistance, 68, 70 area. This has definitely been an underperformer, very much like you said, a black sheep, not the most enthralling or I would say the most appealing stock to be holding the past couple years. Or even now, I feel like it's not something that I want to kind of consider personally. And then again, that's me, right? I haven't liked kind of the execution from management. I haven't really liked their growth. It's actually not been really great. They obviously did well during 2021, and then obviously the fact that with the cycle changing, the economic cycle changing with rising rate environment, and it was just all kinds of wrong. They did not execute on kind of what they needed to do. And of course, there was a lot of negative sentiment around the stock too. So that's kind of turned around a bit. Definitely looking better than, of course, the past year, but not, in my opinion, a long or a buy yet. I feel like it has to clear that 68 area for me to be interested. But even then, just because of my view and past history with this stock, trading it, I'm not a big fan. And it's really been just the fact that it's been such a dead weight of a stock to trade. And even for those that hold the past year and longer, it's like something that I'm not too enthusiastic about trading.
Fair enough. All right, I did have a couple of questions sent to me via chat. You have two more to look at, and then of course we'll look at everybody's favorite meme stock. So Panos messaged me. He said he couldn't make it to webinar. Wanted us to take a look at Walmart. Obviously, going here absolutely nuts post earnings, doing really well. Kind of to the moon type mentality until we hit Friday, and I think we maybe hit the upper atmosphere and didn't quite have the thrust to continue that moonshot because we are starting to pull back pretty hard here on Walmart. And yeah, I mean, this to me, this is a chase, if you ask me, buying up here. But Riz, what are your thoughts on Walmart?
Yeah, I agree. Not a buyer at these levels. I would not consider it really, even unless it gets to 60 or lower. So you can see still a bit of a drop left, in my opinion, if it gets there. Yeah, from a fundamental standpoint, even I think it's a bit richly valued. It's not something you want to be exposed to as we get into this kind of latter half of the year. In my opinion, these are kinds of more, I don't want to say cyclical stocks, but we've seen these sort of companies, retail stocks, kind of pick up significantly the past, uh, I would say the last 6 months, and you can see that clearly with Walmart, right? So I like to wait to see if there's an opportunity to buy a great company such as this, but at an even better price.
Yeah, yeah. I think I'd like a bit more of a discount on Walmart before I start jumping in personally. All right, last one, and then we're going to talk about everybody's favorite meme stock. Let's take a look at Datadog here, another one from Panos, asking our thoughts on this one. So let's see here, kind of end of the year going in from November had some pretty good earnings. It looks like things were going well for this one, and we're starting to climb back up here. It looks like we found the ceiling right around 138 at least short term, and kind of just a slight pullback on it here, definitely dumping over the last week, right down below the 200 simple moving average, and really just kind of consolidating in this area right around this 109. So, Riz, what's going on with Datadog, and what are your thoughts?
Yeah, it's a good company, growth stock, obviously in the right sector, the data security sector, right? So that's a very solid long-term growth industry, I should say. And from a technical standpoint, it's consolidating here the past week at 109, 110. That's good. It's below the 200, it's below the 50. We want to see this level definitely hold. If I were to take a position on here, just from a technical standpoint. I would definitely not want to bag hold this either, because we can see just from November, there is the next support level is definitely lower down past around the 100 area. So that's a good 10% potential drop, right? So I would keep like my stop at around 105. Again, it's not a hard stop, mental stop, and then maybe try and target 115 and 120 for PT1 and PT2 respectively. That's a bit of a reach again in coming into this week with a volatile week as well. Keep that in mind. We got the FOMC on Wednesday. On watch. This is something I'll be on watch, not in my opinion, a direct entry, right? A lot of these are not direct entries, and that's fine. It's fine. We can always look, we can always kind of make notes or set alerts at certain price levels and keep them on watch. That's doing it right. We don't need to trade and buy or sell or short everything that we look at or bring up.
100%, 100%. Speaking of something that would have been fun to short, let's take a look at everybody's favorite meme stock. I teased it in the beginning, and Riz said, hey, we're talking about it. Let's take a look at GameStop. So there was the big announcement that Roaring Kitty was going to be streaming on Friday. Everybody was excited, thinking this thing was going to the moon. And guess what? Absolutely wrecked. And actually, if we look at pre-market, because this thing was going crazy in pre-market on Friday. Yeah,
Right.
so we've got the extended hours here. Going in Thursday evening went absolutely crazy, and then pre-market got absolutely sold off hard here going into Friday, and then streaming started right around here, if I recall, because I
Yep.
was watching it, and I wasn't watching the stream, I was watching the stock. But yeah, got absolutely blown out. Definitely hard sell off here. So yeah, quite a lot going on with GameStop over the last couple days. Riz, I know you have a lot to say about this.
Yeah, so earnings came in and it's fine. You know, you can see this is good. I'm glad you brought this up as well at the extended. You could see, in detail how this thing had such a massive run up. So there was a live streaming kind of announcement, so to speak, on Friday, but he was announced on Thursday, hence the run up. And then what happened was the GameStop earnings were also on Friday, and they came in earlier than expected at 6 a.m. So if really GameStop management pulled a rug on this rally, if you think about it, and that's one thing people don't understand. Not only did they release earnings earlier, they also missed on earnings, and then they effectively did another big shareholder dilution. So they offered even more equity, dumped a lot more equity on shareholders, diluted more shareholders to raise more capital. So really what's happened with this whole GameStop fiasco again is the company has effectively used these rallies to sell more shares in the market, diluting current shareholders, diluting the diamond-handed apes, and take more money in via selling shares, build their coffers while also having suboptimal, I would say, horrible, I would say, fundamentals and declining fundamentals. So no turnaround has occurred. In fact, it's gotten worse. And for the stock price to be even where it's at now, even after pulling back, it's still overdone. I would say richly, even with like a lofty valuation, about $10 a share, and that's me being generous. That's probably what it's worth tops. That's with me, like I said, being super generous. Definitely not worth the 60, $64 a share, not even the 28. So Roaring Kitty went on, absolute dud, I would say. Obviously, the diehards will love that. They'll gobble up whatever. He could take a giant steaming turd on stream and they'll just open their mouth, right? So, definitely something that, in my view, was an absolute bust. Anyone that's kind of neutral on the subject can tell you it was not. Back in 2021, he had a thesis, he had a conviction. This time was just absolutely unhinged, just deranged, no thesis, nothing, just nothing, just another guy just coming in to maybe have second servings and getting rich at the likely on the backs of the so-called apes and diamond. Hey, but they're willingly open to getting ramrodded. So hey, you can't blame Roaring Kitty, Keith Gill for opening them up and serving it to them how they want it.
Oh man. Man, you had me at diamond-handed apes, but man, that stream comment just pushed it over the edge. I mean, you won the internet today, Riz. I got to give you a hand for that one.
Thank you. Thank you.
Oh, no problem. No problem. Well, wow, this has been a heck of a webinar. Thank you so much for all of our people who are here live from Riz Elite. We really appreciate each and every one of you. And of course, all of you who are subscribers here on the YouTube channel, we love and appreciate you just as much. Stick with us as always. We really appreciate it. And we'll see you in the market on Monday.